Hello everyone, K Kim here from the Traders Club, twotradersclub.com. Thank you for tuning in to this video. You're currently looking at S&P 500 index weekly chart, meaning every single candle represents 1 week worth of trading. So you can see we're looking at things since 2009 all the way to 2016, which is today. So about 6-7 years of data here looking at. And I just kind of wanted to look at a big picture. I think, a lot of times when we're looking at when the market starts to shake like this, it is imperative that we understand the big picture, right? Because obviously, if you're looking at things too closely, that emotion, that impulses, that feelings, your adrenaline, obviously when markets shake and bake and you start to see a lot of volatility in the market, it's very, very difficult to understand where this market is headed as far as the long term is concerned. Because obviously we understand it, and I've been harping on this, I've been articulating on this, I've been preaching on this, and I've been emphatically expressing on this, is that trend is assumed to be in effect, right? Until it gives us a clear signal that it has been reversed. Okay? And I'm not just saying, that's not me, it's not coming from me. Let's just learn about that real quick. Okay, so this is my blog here. You just go to About Technical Analysis, go to Dow Theory. Father of technical analysis, this guy right here, Charles Dow, he lived 1851 and 1902. Again, this was before the era of technology and computers. So this guy had to write everything on a little piece of paper and come up with and look at the chart and study the price action. Okay, that's the dedication this guy had to do. Anyway, so he is the guy who founded the Wall Street Journal. Him and his buddy, Edward Jones, right? You guys all understand or all heard about the index called Dow Jones Industrial Average, right? Dow Jones Industrial Average. So Charles Dow, and with his buddy named Edward Jones, they created what they call Dow Jones Industrial Average. Again, this was back in late 1800s, guys. And so whatever he had to say about the market, I really feel like we should take heed of it, right? So what does he say? I mean, we got a lot of things here. One thing to me, it's very valid and significant and relevant with today's move is this. A trend is assumed to be in effect until it gives us a definite, that's a keyword, or clear signals that it has been reversed. That it has reversed or that has been reversed. Right? So let's go back. Okay, so per Charles Dow and his theory, can you tell me, looking at this S&P 500 index weekly chart, this trend has been reversed or has reversed? Do we have a clear signal, or do we have clear signals or definite signal the trend is reversed? Can anyone tell me that? Looking at this weekly chart. No, you can't. We don't have a clear signal that it has been reversed. Yes, we have a signal that we've been moving sideways for about 15, 16 months. That's for sure. We haven't been advancing for sure since maybe late 2014 or early 2015. We haven't been advancing. We get that. We've been moving sideways. We see that. There's a volatility. I understand that. But can you say that this market, S&P 500, has been reversed? Do we have a clear signal as of today that it has reversed? Do we have a clear signal, definite signal that it has reversed? No, we don't. What does that mean? Per Charles Dow, it means the trend is assumed to be in effect. I love the way he said it. He didn't say, well, if you don't have a clear signal that it has been reversed, then trend is very, very strong and it's 100% guaranteed that it's going to go higher. He didn't say that. He said trend is assumed to be in effect because he understands that everything, you cannot guarantee anything. Nobody can guarantee anything. Nobody is God. Nobody has a crystal ball. If anybody coming tell you that they know for sure that this market is going to crash, how do they know this? How can they call these things? Nobody. Can you tell me? Can you guarantee that? You're going to be alive tonight. I'm sure you have a very, very high probability chance me and you will be alive tonight, but it's life. Who knows what's going to happen to you tomorrow or tonight? And that's how this market works. Market will shake and bake. Market will do things. But if we don't have a clear signal that the market has been reversed, we have to assume that, again, it's no 100% guaranteed. There's nothing is guaranteed in life. There's nothing is guaranteed in the market. If anybody tells you they can guarantee something and they know something for sure down to a date, I would run, right? I would run. I don't know for sure that if this market isn't crashed or not. And you might see me, well, okay, I saw your little YouTube posting say you said 2016 no market crash. You know, one chart to explain the chart. I'm actually kind of making fun of somebody. I don't know if you guys know who that is, but I just made a completely opposite little YouTube ad there. I'm just kind of picking on them anyway. But what I'm saying is this: because we do not have a clear signal the market has been reversed, we have to say the trend is assumed to be in effect, right? Which means the trend as of today is valid. It means that what it means is this: as far as a long term is concerned, as far as a primary term is concerned, right? We have to understand there are different terms. We have a primary term, intermediate term, minor term, right? Right? Major trends have three phases. No, not the phases. The market has three trends, right? Primary term, intermediate term, and minor term. And what we're talking about right now is a primary term. This is a primary term, right? So when we're looking at the primary term, what he's saying is this: the probability for this primary term to continue in this uptrend is greater for the fact that we do not have clear signal or definite signals that it hasn't been reversed. That's what I'm saying. I'm not saying that I guarantee you guys it's going to go to the moon. What I'm saying is this: the trend is still assumed to be in effect and trend is valid. Therefore, we must give benefit of doubt to the bulls, to the buyers, looking at this primary term, looking at things long term. With that said, first of all, I want you to look at this here. Back in 2012, you can see that we have this. What is the definition of a downtrend? Lower highs and lower lows. So once we start to cultivate lower highs here, that's a kind of a warning signal, because you really don't want to. If you're if you are a bull, you don't want to see lower high. It means the sellers are cultivating something. They are establishing something here. Right? So we got the lower highs here. That's a cautionary signal in the market. But then once when the bears stop cultivating lower high and clear above the resistance, and when the buyers cultivated higher low and higher high, right there, this was a historical moment. This was that catalyst. This is that pivotal moment. With that cultivation from the buyers, higher lows and higher highs, we saw about 4 to 5 years of prosperity in the equities, right? Yeah. After this shakedown, because what? We started cultivating what? Lower highs. Cautionary signal, yes, but once we cleared downtrend resistance and we started cultivating higher lows and higher highs, that was a pivotal moment, and we saw a bullish trend, a primary term uptrend continuing to the upside. Well, today what we have is this: we do have a lower high. We did, and that was a cautionary signal for sure. But today, last couple of weeks here, you can see that we have cleared that level. We're staying above that. Obviously, we still have what? We still have 3 more days of trading this week. So I'm not sure, because that little candle there, it's not finalized. It's not solidified until the end is over. This week is over. But let's just say if today was Friday and if that was a solidified candle, I would have to say that's very, very strong signal that we're no longer cultivating lower highs. Right? And we came up and we have created what? An eco high. So we're no longer cultivating lower highs and lower lows. And when we look at the MACD here, it's interesting to note that back in 2012, MACD rolled over and came down to this level here, and we found support in this vicinity, and we saw MACD cross. And again, MACD cross alone is not enough many times. A lot of times what people do is they look at these signals and they just straight up, they just go like ham with it. They're like, oh my God, we got a MACD cross, therefore it must be bullish. Well, you need more of that. So you need that as a first signal. You need to substantiate that from the price action. You need to confirm that. What was the confirmation? Clearing above this resistance. So not only you need a MACD cross, but you also need price action to confirm and price action to clear above this downtrend resistance. That's what we needed. You have both. There's a high, again, just because you got both doesn't mean it's 100% guaranteed. Nobody can guarantee anything. It's life, it's market. But it has greater chance, greater probability, high probability at that point the trend was going to continue to the upside. Today is very, very interesting. This is what we call support. We came exactly at the same level here, and we saw MACD cross. Actually, I've been watching this MACD cross here at the Traders Club. We've been looking at that MACD cross for months. Since early 2016, we've been looking at that. All I've been doing is I wanted price action to substantiate, right? Substantiate that signal. I just wanna say this one more time, that when you look at any oscillators or any indicators that you look at, you can't just go ham on these things. You can't just argue with everybody. Just because we have signal, right, quote unquote signals, doesn't mean it's gonna play out. You always want to confirm it, right? You always want to confirm it. You always need substantiation from the price action, because these indicators and oscillators are only subordinate to price action. They must be confirmed. So I saw that cross, but I didn't see a confirm. See, first time we crossed here, but we never saw a confirmation from the price action that is getting above this resistance. That's where we fall back. See? So first time we saw that cross, it never confirmed in the price action. We never saw higher low, and then it fell over again. And then second time we crossed up, but it wasn't enough. What I needed to see that it clear above this resistance, and that's exactly what we're seeing here. Very, very similar chart sentiment to back to 2012. What does that mean? Doesn't mean it's 100% guaranteed that I'm going to call things and say, well, I guarantee you guys that the market is going to go to the moon. Mark my word, because I'm God. That's not what I'm saying. What I'm saying is we have a great chance. We have a great probability at this point that the primary term uptrend could continue. We have other levels that you need to conquer, you need to clear, yes. There are other technical indices much weaker than others, like Russell 2000 is a bit weaker, much weaker, and transport still there are a lot of levels they need to conquer. But if you look at Dow Jones and NASDAQ and S&P 500, we're seeing some great signs. We're seeing some great signs that the primary term or trend could continue. I have one more chart, a bonus chart here. This is S&P 500 index monthly chart. So you can see monthly chart here. So each candle represents 1 month, right? And this one's all the way going back to 2008 to 2016. So about 7-8 years worth of data here. But really what we need to first pay attention is this. Obviously the primary term uptrend, we can say that it is continuing to be valid. We saw, I wrote an article on this. This is what we call a Morningstar reversal. And a lot of times these Morningstar reversal, I see more and more of this, but a lot of times you will see these patterns after a downtrend. So I would really look at this more as a continuation pattern, or more of a kind of a resting pattern rather than a reversal, because I'm looking at this month, it looks more like we've been in this kind of a channel type of deal, maybe even this bull flag type of action, right? But nonetheless, we have definitely got a bearish candle there. We got a doji, more like a dragonfly doji, has kind of a hammer-like sentiment, right? And then we saw follow through next on the following month. So that constitutes Morningstar reversal like candle sentiment there. And then we're currently seeing follow through there. Obviously, in the month of April, we still have about a week and a half to go, so it'll be interesting to note how it's going to close, what kind of candle it's going to be solidified with. Obviously, we're still during the month of April, so that candle is not solidified. It's not finalized. That candle is, right? But here's the thing, though. When you look at stochastics, right? So this is stochastic indicator here. We can see that these bullish cross has been crucial back in 2000, early 2011, and then early 2012, right? So when we started going up and then market pulled back, and stochastic pulled back with it, and you can see how we found support. Do you remember what I just showed you on the previous chart? A MACD support here and here and here. Isn't that similar to what we saw on stochastic? Here and here, right? So even though we saw the pullback, if you understood this chart back in 2012, you could have said this, well, because we have uptrend continuing, because we don't have a definite signal that it has been reversed or a clear signal, I'll have to assume that the trend will continue. And if you said that back in 2012, you banked. If you understood that philosophy that charts Dow's theory, you banked for the last 4 to 5 years. Anyway, going back here, and the market just relentlessly went up. We started moving sideways, started seeing volatility, right? And for the first time, because stochastic has been up here for a while, and this is another thing. So many people think that, last time we got to oversold status or overbought status, will market pull back? Yes. But isn't that interesting that when we got back up to overbought status here and here and here, market never pulled back for years? This is a reason why, because there's a lot of times you can see the stochastic cross. There's a lot of stochastic crosses here, but you see the price action never confirmed those crosses, and they can stay here so long. This is one of the things that so many people look at these indicators and oscillators and they say, well, because it's an overbought, well, I'm gonna short it. That doesn't work, because if you did that, you killed your account. You shorted there, you shorted there, you shorted here, you shorted here. Didn't work. For years, it continued higher. You need substantiation from the price action, right? So, going back here in 2016 or going back to today, isn't it interesting? We came right back down to where we're at back in 2012 and 2011. Isn't that interesting? That we came right back at that level. That's what we call support. And we're currently seeing a stochastic bullish cross. But do you remember what I said on earlier chart? We need substantiation from the price action, right? We need to see a substantiation from the price action. So if I just kind of draw a line like this here, and then let's say by the end of May or April, we see this thing coming out like this, and you start to see this thing expanding, stretching to the upside, then you could say it is confirming. But can you say that with this primary term uptrend still valid, with a Morningstar reversal starting to see a confirm or starting to see follow through, and with the monthly stochastic right at the support, and with that bullish cross signal, and with the weekly chart primary term uptrend valid, the validation there, and clearing above this downtrend resistance, and MACD crossing and clearing above this what we call neckline. This is what I would call double bottom, MACD double bottom, neckline clearing above that. With these data is at hand, can we say that the trend is assumed to be in effect as of today? Can we say that we do not have a clear signal that the market has been reversed? or do we have any kind of a signal to conclude that the market crash is coming? I mean, there was a lot of commotion here, and a lot of people are talking about the head and shoulder formation. And there, you know what? There are times where they're gonna form head and shoulder. Sometimes it plays out, sometimes it doesn't. It doesn't always play out. And this is what a lot of people are talking about here. This was a neckline, and we broke below the head and this broke below the neckline, and therefore we're gonna do that. Well, sometimes it plays out, it doesn't. We played out here. We got a left shoulder head, right shoulder. We broke that head and shoulder. We saw that correction. But here, we never played out. We had a left shoulder head, right shoulder. We broke below the neckline. Market continued on. Sometimes it plays out. Sometimes it doesn't. What you need to see is that you need to see a full confirmation. Initial confirmation is not enough. This is what I call initial confirmation. You need to see a full confirmation. You didn't see a full confirmation. We continued higher. Here, you can see that it just blew right through the neckline, and then we fizzled around here a little bit, and we continued on. And here, we had what it looked like neckline, or the neckline right here. Broke below the neckline, but it never fully confirmed. We never saw that lower high. We never saw that price action confirming that signal. Now, we're getting back up here, possibly, clearing this resistance, possibly nullifying this potential signal. And with these reasons, with these data that I see as of today, I do not think that the market crash is going to come. I do not think that, I don't know if you're going to see a huge bullish move towards end of the year. With the election coming and everything, it might be a bit rocky. I think, there's a lot of fear in the market still. There's still a lot of fundamental data that is out there that is kind of, a lot of traders and investors are anxious about things and nervous. And so I think there could be a chance the market could still see some sideways movement. But with the data at hand, I would have to say that primary term uptrend is still valid. That means trend is assumed to be in effect until it gives us a clear signal. So what I'm telling you guys is this, that I give benefit of the doubt to the buyers looking at the primary term uptrend. Minor term, obviously, we've seen a lot of move here. Intermediate term, we're pretty much moving sideways. So maybe intermediate term, we're neutral. Minor term, we're bullish. Primary term, we're also bullish for the fact that this uptrend is very much valid as of today. Maybe I'll give you guys some follow-up video, maybe next week, next couple of weeks. So please subscribe to my video if you find these videos helpful. And thank you very much. I talk to you guys soon.